Hello everyone, welcome back. This is the final part of chapter 1. And before we begin, I want to ask you a simple question. Do you think the government of India knows exactly how much money every Indian earns every year? Take a few seconds and think about it. At first, many of us will say, yes, of course, the government collects tax, so it must know everything. But think a little deeper. Imagine a fruit seller standing on the roadside. He sells fruit every day, but he doesn't maintain proper accounts. How will the government know his exact annual income? Now imagine a farmer who grows vegetables and keeps half of the produce for his own family instead of selling it. How do we calculate the value of those vegetables? Or think about someone who teaches in a school during the day and gives private tuitions in the evening that earn income from two different sources. How easy is it to record everything accurately? Now imagine doing this for more than 1.4 billion people across India. This is exactly why estimating national income is one of the most challenging tasks for any economist. In today's class, we'll answer three important questions. First, why is estimating national income so difficult? Second, why do government needs or spend so much time calculating it? Third, even after calculating it, why isn't national income a perfect measure of a country's progress? By the end of the lesson, you will not only ready for your CBSE board exam, but also understand why economists never rely on one number to judge any economy. So let's get started. Questions from this topic are usually asked as 3 or 4 mark theory questions. If you explain each point with example, you will score much better than simply writing definition. So, before we study individual problem, let's understand the bigger picture. Imagine your principal asks you to calculate monthly pocket money of every student in your school. There are 500 students. It will take time. Now imagine calculating the income of every family in your city. Much harder, isn't it? Now think about India, where millions of people work as farmers, doctors, shopkeepers, engineers, drivers, factory workers, freelancers, domestic helpers, and business owners. Some people receive salaries directly to their bank accounts. Others are paid into cash. Some people don't keep any written records at all. Some families produce goods only for themselves. All of this makes data calculation extremely difficult. Another major challenge is informal sector. Many small businesses don't use issue bill or maintain detailed accounts. With proper record, estimating their income accurately becomes very difficult. That's why Government of India depends on large-scale surveys, sample studies, consensus data, tax records, and reports from different departments in estimation of national income. Even then, the figures are estimates, not exact counts. Remember this, national income statistics are based on the best available data. But no country can measure every economic activity with 100% accuracy. Now let's begin with the first and most important problems, the non-monetized sector. Imagine your grandmother has a small kitchen garden. She grows tomatoes, spinach and coriander. Every day the family uses these vegetables for cooking. Now ask yourself, did these vegetables have value? Of course they did. If you had purchased them from the market, you would have paid some money. But because they were produced and consumed within the same family, no money changed hands. Since national income is measured in monetary terms, economists find it difficult to estimate the exact value of such productions. Let's take another example. A farmer grows wheat. He sells 70% in the market but keeps 30% for his family consumption. The wheat sold in the market is easy to value because it has a market price. But the wheat consumed at home is much more difficult to measure accurately. This situation is called as non-monetized sector. In developing countries like India, where self-consumption is still common in many rural areas, this becomes a significant challenge while estimating national income. So whenever you write this point in the examination, don't stop at the definition. Always add an example. It makes your answer stronger. Now let's move on to the second problem, lack of reliable data. Suppose you visit a large supermarket. Every item you buy is scanned. A bill is generated. The payment is recorded digitally. At the end of the day, the supermarket knows exactly how much it earned. Now compare this This is with a roadside tea stall. The owner may receive cash from hundreds of customers every day. Many times, no bills are issued, no daily accounts are maintained. At the end of the month, the owner may not know how much he actually earned. Now imagine millions of such small businesses across India. This makes it very difficult for the government to calculate accurate information. Another challenge is that many workers in the unorganized sector are paid in cash. Without proper records, their income is difficult to estimate. That's why economists say the lack of reliable data is one of the biggest challenges in estimating national income. Think of a local vegetable vendor. They may earn different amounts every day depending on weather, demand, and season. Without written records, estimating annual income becomes very difficult. So far, we have understood two major problems: non-monetized sector. Goods produced for self-consumption don't have clear market transaction. Second one is lack of reliable data. Many businesses and workers don't maintain proper income. Now let's discuss another important problem: multiple occupations. Today's economy is very different from the past. Earlier, most people had one job. Today, many people can earn income from multiple sources. Let me give you an example. Suppose there is a school teacher named Miss Sharma. She teaches in a school from 8 a.m. to 2 p.m. In the evening, she takes online tuition classes. On weekends, she creates educational videos on YouTube and earns advertisement money. Now think about it. How many sources of income does she have? 3. If all these incomes are not properly reported, estimating her total contribution to national income becomes difficult. Let's take another example. A farmer grows wheat during the season. In the evening, he also runs a small grocery shop in his village. Again, two occupations, two income sources. India has millions of people with similar situations. Some people work in offices and also do freelance work. Some doctors run private clinic after hospital duty. Some engineers teach online. So when one person earns income from multiple occupations, collecting complete and accurate data becomes a big challenge. In your answer, don't just write multiple occupation. Explain that it becomes difficult to avoid omission or double counting of income. Now let's look at our fourth problem: illegal and underground activities. Imagine a business that sells products legally. Every sale is recorded. Bills are issued. Taxes are paid. Now compare that with illegal activities such as smuggling or black marketing. Do people involved in these activities maintain a proper record? Of course not. They try to hide their income. Because the government has no reliable data, estimating such income becomes almost impossible. For the purpose of CBSE syllabus, these activities are treated as a challenge in estimating national income. The important idea to remember that hidden economic activity make data difficult to calculate. So don't spend too much time writing examples in the exam. Mention one or two examples and explain that these activities are not properly recorded, making estimation difficult. So far, we have discussed why estimating national income is difficult. So let's answer another question. If it is so difficult, why does every country still calculate national income every year? The answer is very simple. Because national income is like a health report of the economy. Think about your annual school report card. Can anyone tell everything about you? Or can any exam tell everything about you? No. But it still gives you an overall idea of your performance. Similarly, national income gives an overall picture of how our economy is performing. If national income is increasing steadily, it usually means production, employment, and incomes are growing. If national income falls sharply, it may indicate economic problems. Governments, businesses, and researchers use these figures to make important decisions. That's why national income is one of the important economic indicators. Now let's understand the uses of national income. Use 1 is measuring economic growth. Suppose India's national income this year is higher than last year. What does that tell us? Generally, it means country has produced more goods and services than before. Businesses may have expanded. People may be earning more. Employment opportunities may be improving. However, remember one thing. An increase in national income does not automatically mean everyone has become richer. We'll discuss that limitation later. Now let's move to the second one. Used to economic planning. Imagine you are the finance minister. You have to decide, should the government build more schools? Should it invest in hospitals? Should it improve roads or railways? To make these decisions, you need reliable economic data. National income helps the government understand which sectors are growing and which sectors need support. It also helps in preparing union budget and long-term development plans. So during difficult periods like economic slowdown, government use national income data to design policies that support businesses, create jobs and encourage growth. Whenever you write economic planning in the examination, explain that national income helps government allocate resource and frame development policies. So far we have covered 4 major problems in estimating national income and 2 important uses. Now let's move to the remaining 2 important uses of national income. Third is international comparison. Imagine you and your friend both score 80 marks in economics out of 80. Can we immediately conclude that both of you performed equally? Not necessarily. Maybe you attempted an easier paper. Maybe your friend attempted a more difficult one. Similarly, countries cannot be compared just by looking at total national income. Let's understand this with a simple example. Suppose country A has a national income of 500 lakh crore and a population of 150 crore. Country B has a national income of 100 lakh crore but with a population of only 2 crore people. Which country has a better standard of living? Can we answer by looking only at national income? No. That's why economists use per capita income, which means per capita income is equals to national income divided by population. This tells us average income per person. You must have studied this in grade 10. It allows fairer comparisons between countries. Now let's understand another use, measuring the standard of living. If the average income of people increases over time, they can generally afford better education, healthcare, housing, transportation, and other necessities. But remember one important point. Per capita income gives only an average. It does not tell us whether everyone is equally rich. For example, if one person is earning 10 crore and 9 people are earning 10,000 each, the average may still look high, but most people are not wealthy. We'll discuss that limitation in the upcoming slide. Whenever a question asks why is per capita income used instead of national income, for comparing countries, always mention population. Now let's come to the one of the most important theory concepts of this chapter, limitations of national income. Many students think that if national income increases, the country automatically becomes better. But economics is not that simple. Let's understand why. Limitation 1. Unequal distribution of income. Imagine there are only 5 people in a village. Last year, each person earned 1 lakh. This year, one businessman earned 20 lakh, while other 4 people still earn 1 lakh each. The national income has increased, but has everyone's life improved? No, only one person's income increased significantly. That is why national income does not tell us how economics or how income is distributed in an economy. Limitation 2. Non-market activities. Think about your mother or grandmother cooking food at home, or a father repairing household furniture, or an elder sibling teaching a younger sibling. These activities have economic value. If you hired someone to do the work, you would pay money. But because no payment is made within the family, these activities are not included in national income. Limitation 3. Environmental damage. Now imagine a factory producing thousands of products every day. Production increases, national income increases. Sounds good, right? But what if the same factory pollutes a nearby river and releases harmful smoke into the air? People may become sick. The environment may suffer. National income does not deduct these environmental costs. So higher production does not always mean better well-being. Limitation 4. Quality of life. Suppose 2 countries have same per capita income. One country has clean air, excellent hospitals, safe roads, and high quality education. The other has heavy pollution, poor healthcare, and high crime. Can we say both countries offer same quality of life? Of course not. National income measures production, not happiness, safety, health, or life satisfaction. National income is an important indicator, but it is not a complete measure of development. Congratulations. Take a moment to appreciate how much you have learned. When we started this chapter, terms like GDP, GNP, NNP, factor cost, market price, real GDP, nominal GDP, GDP deflator may have seemed confusing. Now you have studied every major concept. You have also learned three methods of measuring national income, how to solve board level numericals, how to avoid common mistakes, the problems faced while estimating national income, the uses and limitations of national income. Here's one final trick. Whenever you hear the words national income, think of three questions. How much did we produce? Value added method. Who earned income? Income method. Who spent money? Expenditure method. If you remember these three questions, you will never confuse the methods. Before the exam, revise all formulas, practice at least 10 numericals from this chapter. It is one of the highest scoring chapters in macroeconomics. See you in the next chapter.